It's been a strange week for markets this week. There's been unfortunate tragedies around the world. There's been company earnings reporting, and as always, plenty of economic data. So welcome to the Traders Circle weekly market update. The date is Tuesday, the 17th of October, 2023. And before I begin, you do need to be aware that whatever I say is general advice only. So you have to consider whether it's appropriate for you. So unfortunately, there's been another war in the Middle East, or another sort of escalation to conflict in the Middle East between Israel and Palestine, as you're all probably aware by now. It is definitely a humanitarian tragedy. It's not something that no one wants to see, but unfortunately, I'm here to comment on financial markets, and so I hopefully don't sound callous when I say that this conflict has triggered a big bounce in oil prices and a big bounce in gold prices. Oil tends to rise with a lot of conflicts, as does gold, but I think oil in this case has been particularly strong, one, because of uncertainty around supply and demand, and two, because of possible, Iranian involvement with the conflict. And Iran is a fairly large producer of oil globally, and should they threaten their own supply, either to reduce it or not to sell it to Western countries, then we could see some further price spikes in oil. So this is definitely something to keep in mind. It's definitely something that has put a fire under the oil price over the past week, and it has seen energy stocks rebound quite strongly in US markets. Australian energy stocks have definitely lagged over this time, and that is something interesting to note, but yeah, our largest oil stocks haven't quite rebounded as much. Perhaps local investors aren't believing that the conflict will be as long or severe as investors elsewhere. The other thing that has happened to stock markets is that prices have definitely been a bit all over the place. When we came in the Monday after the conflict began, we definitely saw our market come off, and indeed, we were sort of perhaps a little bit hesitant on Friday as well, because we were expecting an Israeli ground invasion over the weekend. Now, that didn't happen. It's variously been reported that they held it off due to weather, but it could also be that they're sort of scaling back their plans after, international commentary on the Gaza situation, and trying to sort of, chill everyone down and calm things down a little bit. So overall, there was perhaps quite a negative initial response from markets, but I think markets are now hoping that the conflict won't be as full-blown as it initially looked to be. The other thing to talk about is the RBA. So we saw the RBA meeting minutes for their October meeting. They were released at 11:30 today. And before their release, our market was up 1%, 7,100 index points. And then immediately after the release, we fell right back off. So with that release, the RBA basically said that another rate rise is quite possible. They said they heavily considered a rate rise at the October meeting, and that they held off because the jobs market showed some signs of weakening. Now, if data does come in more inflationary over the next 2 weeks, I suspect there's a fair chance we do see a rate rise when the RBA meets on the 7th of November. Now, there will be a lot of data over the next 2 weeks, and this will be very important as to whether we get that rate rise. The first of these data points will be Australian unemployment on Thursday, around 11:30 a.m. Australian Eastern Daylight Savings Time. And yeah, if unemployment comes down, or unemployment remains very low, that does increase our chances of another rate rise. The reverse is also true. If unemployment increases, if unfortunately more people lose their jobs, it does mean the RBA is more likely to hold again in November. The week after that, so next week, we're going to see Australian CPI data, which is taken as an analogue for inflation. That'll be on Wednesday morning, again around 11:30 a.m., and that's going to be the main event. This is quarterly CPI. This isn't your monthly reading. This is going to be for the third quarter of this year. And, the last quarterly reading showed CPI still growing around 6% year on year. We really want to see that number come down, and come down a fair bit. If that comes in still, around 6%, still comes in strong, again, we're likely to see another rate rise from the RBA in November. It is expected to come down, but we will have to wait for the actual report to see just by how much it comes down. Because 6% is still, double the RBA's target range, the upper bound of the target range. And, we really want to see some headway being made into that sort of high CPI growth, that high inflation number. Now, obviously, the RBA can't control, what oil prices do. They can't control what, imported goods, their cost is. But by raising interest rates, they can perhaps strengthen the Australian dollar, which might reduce the prices of those imports. So yeah, a lot to weigh up with the RBA and Australian economic data over the next couple of weeks. So those are the economic data that we've got for Australia, but there's also some key events for US markets coming up. So currently they're in a company earnings reporting season. That kicked off in earnest on Friday, and it actually started off pretty well. We saw several major companies report better than expected results, including United Health, a very, very large health insurer. We saw JP Morgan, Citigroup and Wells Fargo all report better than expected results, some major banks there. And BlackRock, a large funds manager, they had a fairly mixed result. They beat on earnings but missed on revenues. So overall, the earnings results have been pretty positive so far, but we've only had a very few number of companies report, and the earnings will continue to flow this week. There's going to be several large companies, many large companies in fact, reporting this week. And if the current trend is anything to go by, that could be a bullish mover under individual stocks. So it's definitely something you want to watch, sector-specific movements, stock-specific movement based around company earnings reporting. The other thing with US data is we will see retail sales tonight. That's going to be a very big one with regards to their inflation battle. Their inflation is, coming down. It is quite near the target range. They do have a slightly lower target than us, but theirs is down around 3.6, 3.7% and headed in the right direction. They also want to see retail sales growth slow tonight. If those retail sales come in strong, there's a chance that we do see a reinflation situation where inflation starts to tick back up again. And again, that's not what the Federal Reserve wants to see. That's not what mortgage holders want to see. That's not what markets want to see, because it could lead to more interest rate rises. Following that, there'll be plenty of other US economic data reports, and all of them at the current time, unfortunately, are going to be super important for the market. It's a very macro-driven market. It's driven by the balance between interest rates and inflation, and the probabilities of more rate rises or how long rates stay at their highs. And it's been that way for a while, over 18 months now. That's not what I want to see and not what traders want to see, but that's the unfortunate market that we're living in at the moment. I'd love to come to you each week and talk more stock-specific stuff, more sector-specific stuff, get more into the nitty-gritty. But we're in a very macro-driven market, and that will probably continue until we've seen a real clear peak in interest rates. So let's have a look at the charts for this week. I'll start with our market, the XJO, and we can see that before the RBA meeting minutes were released this morning, we actually got up to 7,100. We got right back to that key resistance level, and then following the release of those minutes, we came right back off. And that's the market pricing in the possibility of another rate rise either in November or perhaps even December. Overall, though, we may still have a little bit of upwards momentum in the short term, and that leaves us inside a very short-term ascending triangle. So resistance at 7,100, and then perhaps this short-term uptrend line. Should the uptrend line break, I suspect we'll come back to 7,000, and should we break through the resistance at 7,100, we could come back to the medium-term downtrend line. Currently, that's intersecting around 7,150 index points. I wouldn't be expecting too many points beyond that level until maybe our CPI reading next week. We'd want to see CPI come way down, and in that scenario, we may break higher. Looking at the US market, this is the S&P 500. They're in perhaps a descending channel pattern that's formed since their peak of July, and they are setting a clear set of lower peaks and troughs. So we just had another lower trough, and we'll be looking for another lower peak on the current short-term move higher. They do have some resistance around 43.85. They've been unable to get through that level for the past week. That's also sort of roughly the gap level they had back in late September. Should they fall from here, they may come back to the longer-term uptrend line again, and that's currently sitting around 42.50 perhaps, also where the 200-day moving average sits. If they do break higher, the short-term downtrend line isn't too far away. I wouldn't be banking on too much more than 4,400, at least until data changes things. Alright guys, that's it for this week. Things are up in the air a bit. I think markets are in a waiting mode, waiting for more data, waiting for events to resolve, and then they'll make their next directional move. Hopefully you guys enjoyed this one. If you did, let us know with a like. Let us know in a comment. Click the subscribe button, and we'll see you in the next one.